Well, yes, indeed. The true winner for 2017 in the markets has been the Niveshak. And that's a theme that we're going to carry on, because as a business news channel and, a business news channel that is furthering the cause of investor education, investor awareness, it's very important that the Indian investor makes the most of the bull market that we are enjoying currently. And who better than A. Bala, CEO of Birla Sun Life AMC, joining us right now in the studios to talk about how the Indian investor has come of age and is really participating in this big bull market. Bala, it's great to have you on the show. Could you have asked for a better 2017 with the way SIPs have flooded the markets, money coming into retail investors and they taking their destiny in their own hands. So it's not depending on foreign investors anymore, but domestic investors coming of age.
I think clearly we have seen a shift in the trend. I would probably say that the initial hard work that done by the mutual fund industry in promoting mutual fund industry as a concept and also be part of the consideration of investors took some time actually to see the result what you are seeing today. And 2017 can be attributed to many things such as the AMC-led initiatives around mutual fund IA campaign. And second is industry education activity that is being undertaken by all mutual fund players across the country to educate investors that coming into the mutual fund is more important. And
with the help of media channels like us.
Yeah, that's like you, yes. And that's why I think a lot of people actually started believing that investing in mutual fund is a must. Yeah. And third, of course, is actually the understanding the SIP way of investing is the one which has seen caught on quite the attention of every investors, which of course showing in the number. I still remember about a year back, at the beginning of the year, the monthly inflows in SIP for the MF industry as a whole, it will be somewhere around 3,200 crores. The same number about 2 years back, it was almost about 3 years back or 4 years back, was about 1,800 crores per month. And today the number stands about 6,000 crores. And it's growing at about average about 28 to 30% rate of growth that you are saying. Second is the number of investors whose check cuts every month, which is aggregating to the 6,000 crores number, is almost about 1.6 crores numbers. So 1.6 crores multiplied by 4,200 rupees is the one which gets debited every month from the account and comes to the mutual fund account.
And that's just the tip of the iceberg, right? 1.6 crores. I mean, look at the potential for a population of 1.3 billion. I'm not saying, the whole population will get into equities, but you have such a headroom there.
Correct. No, I think the way we also look at it, while of course it's easy to put a number saying that we have 1 crore, 120 crores, 125 crores population, therefore that many number of investors have to be there in mutual funds. While it is logical to assume that many people have to have a bank account, there is absolutely no need that everyone will have one mutual fund.
True.
At the same time, households, if you take the household, investable households, would be roughly about 25 to 30 crores. Therefore, 30 crores customer base can be actually added to the mutual fund. If you go with the household as a statistic number. And every household has to have one fully owned mutual funds. And if we go with that concept, definitely the potential for the industry to actually grow in the next, say, 10 years, quite phenomenal actually.
Bala, let's talk about the near term, and the numbers speak for themselves, I guess. You've seen the highest ever mutual fund inflows of what, $26 billion. The data says that equity AUMs are now 5.3% of India's market cap. The annual cash turnover has hit a new high in 2017 and higher than the previous bull market of 2007 as well. But what is it that we're staring at in 2018? Will this kind of steady inflow continue? Will it get only exaggerated? Because one must also realize that other equity classes, and I'm not calling Bitcoin an asset class here, and I'm not even talking about the participation, but be it real estate, be it gold, nothing else is working. So would you say that these numbers are bound to become higher in 2018?
I think exactly. The way I think is, I would probably say we're just scratching the surface. In the sense that what we have seen in the year 2017 is just beginning of the reasonably good sustainable flow that could come into the MF industries. And the reason is, as I mentioned earlier, completely underinvested in mutual funds. And most of the investors in the country, if you look at it, savers, you can say savers, you can say investors, they all have predominantly high exposure to real estate as well as high exposure to the gold. And when I come to the question of real estate, I think owning a land owning a land versus owning a flat. I think is owning a land actually substantially higher than owning actually a flat in an apartment or in a bungalow. I think that's where I think it works. I think if we go with that principles, if you look at the whole market, there has been some kind of a standstill in the last few years. And post demonetizations, definitely I think the kind of so-called unaccounted money or black money, which otherwise would have found its way to properties and other things, they all now become actually the clean money. After the demonetizations, after submitted to the banks, it is now actually fully compliant from the KYC point of view. So therefore, the money action can potentially move to the mutual funds, other financial services product. That's being the case, what we have seen in 2017 is just setting the ball rolling for the next 5 years. We can't look at 2018. I think we'll have to look at beyond 2018. So next 5 years, if you look at the industry could potentially have a large size. I was just doing one simple comparison between India and US. US is almost about 110% of the banking industry size is actually the size of the mutual fund industry size. 110%, not even 100%.
Wow.
110% of the banking industry size is actually mutual fund industry size. In India, it's just about 18% of the banking industry size is the mutual fund industry size. The same number, exactly about 1.5 years back, or maybe 2 years back, it used to be somewhere around 13%. The 13 now has gone to 18, as you mentioned that 3.5% holding by mutual funds in each stock market has now gone to about 5.5 or something. And the same way, if you look at the number from 13% of the banking industry size, today is about 18%. The 18% what stops actually goes to say 30.
Yeah.
And if it does go to say 30, definitely I think the size of the current industry will become larger. The second part is, as I mentioned earlier, that SIP is 1.5 crores, which I am saying, the number actually can keep growing. I think there is an increased feeling that the way of investing in mutual fund, despite the market being volatile and fluctuating and so on and so forth, that SIP is the way of investing and now is gaining more and more confidence.
So you don't sense that, headlines like a borrowing picture, the fact that it's going to maybe stall the interest rate regime as well, maybe we're going to see higher interest rates, etc., could challenge the market dynamics or SIP inflows in the very near term?
No, I don't think so, because these fluctuations are very minor in nature. And what is the ultimate impact that it has in the big picture? Very small actually. And borrowing going by 43,000 crores, definitely as a bond trader, if I'm running a position of say holding a 10-year bond or a 20-year bond, definitely my portfolio gets impacted as a money manager, because I run a portfolio. But that's not the case with the entire investing public. So therefore one should not get worried about that. Second is this 50,000 crores borrowing, what potential impact it would have? It could probably increase the rate by about say 20 basis points. That increase in 20 basis points ultimately add to actually say 10 basis points improvement GDP number, and somewhere it will get compensated. So therefore, if I start getting worried about some of these short-term
because there's also a worry that in the run-up to 2019 elections, the government is going to get populist, putting more pressure on the FIS. You don't believe that this could derail the market rally?
So I don't see. Ultimately, it's actually is having a belief about the futuristic in nature, which is an optimism, versus actually the short-term outcome. And whatever is being done, I think is going to result in longer-term outcome, better for the country and better for the economy and better for the companies and better for the consumer at large. Then we should not worry about it. I think if you look at the way I think the roadmap is on the same line is there. Let us look at the GST as an example. I think a lot of assumptions are being made. GST initially it was successful, and now we have seen actually GST collection is going down. I think it's such a mammoth task is being implemented, and everybody now is getting an awareness that complying with the GST and paying GST is a must. And that's, I think, now in the process of complying. Definitely there will be some hiccups in the short term, but in the longer term trend, if you look at it, if everybody becomes comes under the compliance net, and everybody starts paying whatever little they have to pay, I think that power of actually little bit everybody is paying, I think it's going to be substantially higher in terms of seeing the big picture number.
Yeah, and I'm a firm believer, Bala, that the price is telling you something, and if the market is largely stable today, I think this issue is not that much top of the mind anymore, as we had perhaps thought of yesterday. But just taking up the point that you were making about comparing India's mutual fund investment levels to those markets, some of the key markets globally. And I want to bring up the mutual fund penetration graph for the benefit of our viewers to highlight how much more there is scope of domestic investors coming in by scaling size into the markets. Now, India's mutual fund penetration stands at 12%. The global average there is 62%. You look at the US, 95% of that market, essentially meaning that everybody in the US is invested in mutual funds, literally in a way. France is 76%. If you could just run those graphic plates for the benefit of our viewers, that pie chart, if you can bring that up. The mutual fund penetration that stands in India versus the global averages, and there you go. It just shows the kind of scope there is for more and more domestic investors to actually test waters via the mutual fund route into the markets. China is at 11%, but I think it's a regulated market, so it may not be a complete apples to apples comparison over there. But you think that, with the market, even if we were to look at a correction, Bala, that just the sense that we are in a long-term structural bull market, irrespective of intermediate dips, that will bring investors consistently into the markets at every level?
I think exactly. It's one. I think fundamentally, as an economy, is now getting better, stronger rather. I would say. I think the last 2 years of the steps that is taken by the government, including the reforms which around the bankruptcy code, and then the Companies Act getting changed and so on and so forth. The resolution process has come in the banking systems. All of them actually they're fundamentally sound in nature to make the India more financially stronger. And so that's been the case. I think the as we move forward, I think growth is something I think has to fall in place.
Do you worry about competition with ETFs, Bala? Because that's a big talking point in a mature market like the US. And I know India still is an inefficient market.
Right.
You still have a lot of scope for outperformance in actively managed funds.
Exactly.
But offshore funds are routed through ETFs $6 billion into the market. Is that a product that a lot of mutual funds are now evaluating to offer to investors because the cost of investment is very low?
Exactly. I think clearly the trend, if you see draw a parallel to US, definitely I think the large flow of money is moving into the ETF, and definitely the actively managed funds also are getting inflows. But the question, I think, from India point of view, at least for next 5 years, that's what I would assume, that India would continue to provide a big alpha opportunity for money managers to outperform the index. And given the fact that only about 100 companies contribute about 80% of the market, and rest of the companies comes about the 20% of the market, as the economy is getting more and more broader, and then the breadth in the economy keeps rising, the way I think each state governments are spending money in terms of competing with each other and building the infrastructure, there will be a tremendous scope for money managers to go and pick stocks from the mid-sized companies to generate the outperformance, which in my view I think will continue to stay for another say 4 or 5 years. As your market gets matured, definitely ETF is a product cannot be ignored, and definitely will come from the longer term point of view. At the end of the day, we also cannot ignore anything that is good for the customer, and whether it is from the cost point of view or whether from the performance point of view, cannot be ignored by any manufacturer or players like us.
But within the past performance in 2017, which category of financial products has seen the maximum growth in participation?
Largely, of course, it's come in the is in equity. So that's as far as the mutual fund concerned. And within the equity, if you see, from a time where a lot of money used to go into the large cap funds, we have seen a significant shift towards multi-cap and some bit out from mid-cap. So that's where I think large flow of money has come. The third category where we have seen a significant flow the last 1 year, which I would say is the balance fund as a category. From the customer point of view, from the investor's point of view, distributor's point of view,
they want to play it safe.
And they want to play it safe. That means instead of me saying actually play it safe, they themselves actually while doing an asset allocations, and they actually choose an asset allocation in such a manner that go and actually park yourself in a product which actually takes off for those fluctuations. That's why I think balance fund as a category has grown quite well.
Bala, there's no denying that 2017 has been a dream year. It was a watershed moment for India with GST, demonetization, everything that we grappled with, and a lot of political movement as well, both domestically as well as on the global front. But what's now the vision for 2018? What is the potential growth that mutual fund SIPs can give you going forward?
So then the way we see is, I think if you look at last 4 or 5 years, I would say we have been extremely conservative in estimating what is the rate of growth for each year. And whenever we estimated roughly about 80% growth, the actual growth has been in excess of 24-25%. Even the last year, if you take roughly about 38% growth that has come in the overall growth, and most of the growth has come in the equity, and second is an SIP. I would assume that I think the momentum would continue. The another area where I see a significant growth I think could potentially come, I always ask this question that we talk about only the equity as an asset class. There is another significant asset class and the mutual fund have done exceedingly well in serving the large pool of investors' needs actually is the fixed income schemes. And if you look at every consumer today, whether you or me or all of us if you take, we only put that out of every 100 rupees, we put only about 30 to 40 rupees we put in equity. Balance 60 rupees actually goes towards fixed deposits or any fixed coupon bearing instrument. And mutual fund can play a very big role in meeting the needs of those investors who have been predominantly parking their money in fixed deposit. I'm not saying you should not park in fixed deposit. Fixed deposit is an asset class. At the same time, mutual fund fixed income can also be considered as a part of an asset class as an alternative to the fixed deposits. Though we don't guarantee the return, but in the longer term, it does deliver the same return as the fixed deposits generates. That I see actually is a big shift that could potentially change. I mean, as I mentioned earlier, US market is bigger, not just only out of the equity. Is the whole industry has grown and because of the money is coming into the fixed income as well. So that I see actually a big shift that could change in the 2018. Some bit of money would come into the debt schemes as well.
Right, we get a lot of questions, Bala, from viewers across social media platforms. The one broad macro question is, fine, we're investing money at every level, but our valuations looking stretched because the mid caps have run ahead of large caps this year. And even from a large cap, valuation benchmark point of view, you're nearing the erstwhile bull market highs.
Yes. So the valuation is something has been in a question mark every time, and that's something which is something none of us are able to find in a right answer to it. I think the way I look at is if there's an optimism, there is a comfort, and if there's a longer term outlook for the economy is very good, which essentially means the market will trade at a little higher valuations on the hope that the earnings will come back. Though the earnings have not been actually meeting the expectation of analysts in the last 1.5 years, and that is not the case in the last one quarter. If you see in the US market, the earnings have been surprising most of the analyst expectations. And I would assume from India point of view, we are more or less there. I think the expectation versus the outcome could be better in terms of outcome than the expectations. If that actually is going to stay, I think valuation probably would be a point of debate, but never be actually be able to fix that, given the fact that the outcome of actual results is going to be better than the what we see as an expectations.
And in any case, the market is in an uncharted territory, so who's to call what's the right valuation and what's fair value? But Bala, pleasure speaking with you.
Thank you.
Here's wishing you and your entire team a very happy 2018, and hope next year when we talk, we have doubled all the figures that we talked about in 2017 when it comes to equity inflows.
Yeah, sure. Thank you. Thank you, and I also take the opportunity to wish all the viewers Happy New Year and a great year ahead.
Thanks so much.
Thank you.
Okay, let's just revisit then what the market has been up to so far, and we're still pretty quiet, so you're not really seeing a knee-jerk reaction of that higher borrowing figure on the market, at least so far. What are the banks up to? Banks also are not really getting clobbered.